Welcome back to the YouTube channel. I know I haven't been posting in a while here, but I'm back at it trying to make more videos. In today's video, we're going to go over why you need to triple and double check the numbers before you're going to pull a trigger on a house in Florida. And I'm going to show it with data and backing it all up. So if you are right now currently looking at buying a house in Florida or an investment property, you need to be very, very worried, because as of today, the storm just passed in Florida, and Idalia it was not pretty. And so this was just 1 year after the one that hit Fort Myers Beach, and Fort Myers has been destroyed from that one. And now Idalia also did some major damage in Florida, and now I've woken up today and they're already talking about Hurricane Lee might become a Category 4 hurricane, and it might impact into Florida again. So what does that mean for you that's watching this video? Well, according to the title, you're probably interested in buying a house in Florida or buying an investment property. So I used to live in Florida, and till like 2-3 years ago, I've always wanted to buy back in Florida, and I changed my mind. So why did I change my mind? Well, when you go to Zillow and you have this little text bracket box where it says how much house you can finance and what the numbers are. So I'm pulling it up right here, and when you find your perfect little house that you want to buy, and it is sitting right now for about $595,000. So let's go look at what qualifies you to buy that house. So when you look at the bottom of the section and it says, what your monthly costs and mortgages are, that's going to be very, very interesting, and that's where you need to be triple and quadrillion times due diligent, because your principal and your interest payment on it is depending on what rate you take. If you take like a variable, yes, it's going to change. But let's say, for instance, you take a 30-year fixed mortgage rate. So your property tax, that's going to be a given. And then now we're going to go to the homeowner's insurance. So the national average right now in Florida is about $6,000. And I had the news article, just watched that today. And so when we are going to bring that up to $6,000, your numbers are going to look a lot differently, because you're starting to pay $500 a month just in insurance. And a bunch of people that I saw online over the last few weeks have been saying that they got dropped, and so they need to use Citizens. Citizens, like a state-backed insurance company, and they can drop you back out of that again if they can find you a coverage in 20% higher without you getting new insurance. So they can find somebody, another insurance company that can pick up your insurance if it's in 20% higher than Citizens. So if your insurance policy is $1,000 a year and State Farm comes in and they are going to offer $1,200, you need to go with that insurance company. But State Farm, I think, left, so there's not that many more options left. And Citizen also just filed with the state that they're going to increase their rates by about 15% over the next few years. So that is also going up. So if you are willing to buy a house and take that gamble, you need to be so sure, because you'll never know what's going to happen next. It might be that your house is going to get wiped out in the next storm, or you might never have a problem. And when you run the numbers, you need to have a big cushion, because another insurance company that I just watched online just said, I have the link in the bio if you want to look at it, they're dropping people because their houses are too old. What makes absolutely no sense, because some houses are built so much better from the 1980s than in the early 2000s. And so that insurance group said, we're not going to insure houses that are older than 2014. So if your house isn't built in 2014 and after, we're not going to insure you, because they've said that 80% of lawsuits in the nation about homeowners insurance comes from the state of Florida. So there is some major doom and gloom type of scenario where we have to figure something out. And when we look at some listings prices, they've been decreased, the list prices, for months now. So when you look at them, it has been $650, $599, $594, and the prices are going to keep coming down because the cost of owning is keep going up. So in a best case scenario, you can sell your house at $1 million or $2 million, and you've bought it for $100,000, but you have no ongoing costs, almost no taxes, no insurance, and then people can afford to spend that money on the house because the ongoing monthly costs are small. But now we're in a situation where you have such big insurance numbers that's going to bring down the amount that people can spend monthly on a house. And Americans shop on a monthly basis. So what does that mean? That means Americans only looking at the monthly payment. And you should look at the monthly payment when you buy a house, because $1 million house doesn't really mean too much. But when you run it down with your down payment and your insurance and all that, needs to be feasible. Your monthly payment needs to be doable. So when you're going to buy a house for $500,000 like this one, and you're going to put some hefty amount down, and you're going to have to pay, even with a 20% down payment, with insurance, you're going to pay about $4,200 a month in just ongoing costs. That is a lot of money. And yeah, it's a nice, beautiful house, but it is, for that area, it is not really suitable. And I know people have been saying, oh, it's going to keep going up. But when you're retired, you're on a fixed income. And so you might be great today, but that does not mean that you're going to be good from a year from now. Because this family right here, let's listen to it.
Their rates have literally gone through the roof since moving in just 3 years ago.
It's gone up 240% in 3 years. That's kind of the big, that's a crushing number.
They fired their insurance company, and while they found a lower rate, even more concerning was this note from their new insurance company saying they're no longer insuring homes built before 2014.
My mentality now is every year when it's time for an insurance renewal, what are we facing?
So with fewer insurers to choose from, they fear even selling their home now could be difficult.
Who's going to buy a home when they're not going to be able to?
So as you heard in this video, that family's insurance went up by 200%. So now I'm going to ask you again, is it smart to buy a house there if your insurance can go up by 200% in the last year? And they even said there that they don't know next year if it's going to go up again, or if they're going to get dropped, or what's going to go on. So this is my question to you. If you watched till the end, thank you. Are you going to buy a house? Let me know in the comments below.